Good afternoon. My name is David Freeze, and this is the BESA webinar. And today we're talking all things reverse VAT and IR35. And we have Liz Bridge, who's Secretary of the Joint Taxation Committee, joining us shortly. And we've got no roundups today because we've already had a lot of questions. But there's one thing we have to do today, and that's say thank you to Martina Stocker, who's been the producer of this since February 2020, so over a year, and has done staggeringly 284 webinars. Martina, are you there?
Yes, I am here, David.
Good. Well, thank you very much, and I'm very sorry to have embarrassed you by bringing you on camera. Is this the first time you've been on camera?
Yes, and you only gave me about 5 minutes notice, so thank you.
So it had to be done, but thank you. And you're going off to look after our events from here on in, member events and meetings, and there's that kind of area.
Yes,
Great.
I am.
Good luck.
Thank you. Thanks.
And thank
Bye.
you. I can't stress how important she's been. She's got us out of all kinds of problems and hassles. So without further ado, let's get Liz on. Liz, are you there?
Yes.
Hello.
Surprise myself.
That's always a good start, as they say. The Joint Taxation Committee, can you just tell us what the Joint Taxation Committee is, please?
It's 10, well, actually at the moment, 12 trade federations joining together to pay me, and I do education for the federations, I do lobbying with the government about legislative changes, and I am a specialist on tax for the construction industry.
And you're a tax judge, is that correct?
I'm a member of the first tier tax tribunal, which is the independent judiciary that hear your appeal if you fall out with the Inland Revenue.
That must be a conversation stopper at dinner parties, Liz. I'm going to get out of your way. I'll be back for the Q&A. Thank you.
Right, we're going to run through the, oh no, hang on, let's. Martina, are you going to run the slides?
No, you are, Liz. You're going to show them.
Sorry. Let's get them then, shall we? Sorry, everybody. Let's see if this works. Get lost. Okay, is that okay for everybody? I can't
hear. Yes,
that
looks good.
Right, okay.
That looks good, Liz.
Yes, okay. I'm going to talk today about reverse charge and off payroll working. We'll do reverse charge first. It's a very short session today. So what we are doing is recording 2 big separate sessions on reverse charge and off payroll working that will be put onto the BESA website so that you can watch a recorded webinar. So I will be belting through both topics. I'm hoping that it's a sort of revision, because I'm hoping that with only 2 weeks to go, a lot of you have some grasp on where you're going, but some may not. So let's at least start and see where we go. This is the flow chart, and the flow chart I want you to print. I want you to laminate it. I want you to have it on your desks, under your pillows, and possibly tattooed to your chests, because actually the flow chart was designed so that you shouldn't make a mistake, and that it's a flow chart that tells you what sort of invoice to send out, whether to send out an ordinary VAT charging invoice or a reverse charge invoice. And if you start at the top and work slowly down in a methodical way, it will solve your problems. Let's run through it because there are concepts on it I'm going to go over in more detail. You'll begin by asking if you are invoicing for the supply of labour only as a gangmaster or employment business. Are you actually only a labour agent? Or are you simply a builder's merchant invoicing for materials? I'm not talking about the materials element of any supply or fixed contract. That top box applies only to labour agents and merchants. And I think what you'll look there is that if it's a labour agent or a merchant, you'll get a normal VAT invoice from them. But you listening to this webinar are not either of those two categories. So you'll come back down to no. Is any part of the supply you're making to the customer within the scope of CIS? Most of you are flat out within the scope of CIS. I think you're heating and ventilating, electricians and sort of fringe plumbing is how I see your trades as a federation. And that certainly if you're working for main contractors, you will lie on their subcontract ledgers and they think that the work you're doing is within the scope of CIS. If in the course of business you were selling kitchen furniture or fans or chocolate bars, the answer would be no, and you would charge a normal VAT invoice. But where you are doing electrical, plumbing, heating and ventilating work, I think the answer is going to be yes. Is the supply standard or reduced rated? The alternative would be 0 rated, and you would go out to the right. It's a 0 rated supply. You charge a normal VAT invoice, but because it's a 0 rated supply, there is no VAT on it. A standard or a reduced rated supply, which are more normal, you come straight down again. And you come to these two questions. Is your customer VAT registered? And is your customer registered for CIS? Is your customer VAT registered? Are they on a very large database with the Inland Revenue? Perfectly acceptable to ask them. You're going to have to ask them, and you are going to have to get their VAT number, and actually I would say you're going to have to check it. If your customer isn't VAT registered, let's say they're a householder, you'll charge normal VAT. If your customer is VAT registered, you will ask them if they're CIS registered. Other contractors in construction are CIS registered. Anybody who spends more than £1 million a year on building work is VAT registered. So CIS registered. So big housing associations are CIS registered, Marks and Spencer's are CIS registered, the Highways Agency is CIS registered. You want the answers to those two questions. Because if the answer to those two questions is yes, you know that you are working for somebody very well known to the Inland Revenue and also within the frame for construction trades. The final question: has your customer provided you with a confirmation it's an end user? I'm going to talk about in a minute. If you get yes as an answer, so you get an end user statement from them, you would charge VAT normally. If you got nothing from them, if you asked and you received absolute silence, or if you were told that they weren't an end user, you would reverse charge the supply. So the default position when you're working for somebody very large, who is VAT registered, who is CIS registered, is that unless they tell you they're an end user, you're going to reverse charge the supply. So you're going to need the end user statements to come in from people like Marks and Spencer's, like Balfour Beatty, and if they don't, you'll be reverse charging. So let's go on to some concepts. So I can get my next slide on. Right. I am worried about you because I think a lot of you are very large subcontractors who do a great deal of work for main contractors and for people like Marks and Spencer's or hospitals or local authorities. Do you buy a lot of materials? If you buy a lot of materials in this brave new world after the 1st of March, you will pay VAT on them. Material only supplies are never reverse charged. If the contract is for a main contractor who's going to on-bill a customer, you are not working for an end user. You are working for a main contractor, and you will have to reverse charge them, and you will be out of pocket. The VAT that you have paid on the materials will be more than anything you can recover until you put in a VAT return. You may need to become a monthly repayment trader. You need to think about your cash flow now, and you need to talk to your accountants about whether to become a monthly trader. Right. One of the things that you also will need to know is what is an end user. And an end user, let's start at the bottom. A domestic householder would be an end user. They're not selling on your building work supplied to them and they're selling it again. They're going to use it. A utility company, a local authority, the work you do for them, they use the buildings to make other sorts of supplies, gas, electricity, rentals, rating departments. They don't sell building work. A landlord sells freeholds, leaseholds, and rents. He doesn't sell building work. A developer is the most difficult to get your head round. A developer is a speculative builder who is going to sell freeholds or leaseholds, but he doesn't sell building work. If somebody's the opposite of all these people is a main contractor, somebody who's going to parcel up your work with their work and charge a customer for building works. An end user is going to turn your product to sit in the building or sell the building. When you're thinking about whether you work for an end user, I always want you to look at who pays you and who you are contracted with. I don't want you to go dizzy and look at the overall project, the only person that can give you an end user statement is the person you're contracted with. And that is the person who, if you were not paid, you would sue for money. That's the only person that can give you an end user statement. And that's the person you have to think about. Is this person an end user? Because if they are, they could give me a statement and I would charge normal VAT. But if they aren't, I will be reverse charging. So what are you doing in this 2 weeks? You are looking at your customer file and you are thinking about the fact that come the 1st of March, you are still going to have to put out invoices and applications for payment. And you're going to need to know very quickly whether you are going to reverse charge them or charge VAT. So you want to know now whether the customers that are going to pay you in March and April are VAT registered, and are they CIS registered. In the pack with this webinar is a draft letter. Ask your customers, are they VAT registered? Give you the number. Are they CIS registered? Ask for their UTR. And are they an end user on the project? You'll need a letter or an email. You don't want a phone call, and you don't want to guess this stuff, because if you were to guess wrong, you might be asked for the VAT. If they tell you they're VAT registered, they tell you that they're CIS registered, and they don't give you an end user, and you reverse charge, you can never be asked for the VAT. So ask, get it on file. This is your to-do list, right? There is a good webinar on the government site, watch that, and there's going to be a full webinar on the BESA site. Talk to your accountant about cash flow. Make sure that you can pay your bills through the 1st and 2nd quarters of 2021, because cash flow when we go through March will start to get very tight indeed. Make sure that you have a redesigned invoice and application for payment that is reverse charged. I don't want you trying to redesign a wheel on the 1st of March when it could be done now. You could make sure that your software produced them, you knew what they look like, and you knew how to do it. Think about how you're going to monitor and record whether your customers are VAT registered and CIS registered, and where you're going to keep your end user declarations. And how you're going to do it. I would say do it at tender stage so that this information is all set up with all the information about your customer as you begin a job. Think about whether you're going to be a monthly repayment trader. Warn your subcontractors. I think everybody listening to this is VAT registered and CIS registered. And I doubt very much that you are end users on any of the projects you're on. You're probably not speculative builders. Then your subcontractors are not working on your own offices. Tell your subcontractors that after the 1st of March, you don't want any invoices carrying VAT, because you won't pay them. You will return them and ask for a reverse charge invoice, and we'll pay it as soon as you get it. The final thing is you must have upgraded software and you must know how to use it. And that's the end of the brief run through of reverse charge. I hope that in the speed of doing it, you're not lost. Hope you knew enough to be able to stick it on. But remember, there's a bigger webinar on the site. Now I'm going to go seamlessly on to off payroll working, I think. Right, so reverse charge VAT starts on the 1st of March. Off payroll working starts a month later on the 6th of April. And actually, it's only been legislated for large and medium-sized employers. But I want you all looking at the issues, even if you're not large or medium-sized, because in my experience, it's throwing up a lot of issues about men you've got working for you, self-employed who shouldn't be. And sooner or later, this legislation will hit small employers, and you ought to know what your problems are. So a large, who's in the frame for the start on the 6th of April is anybody with more than 50 employees, or whose turnover is more than 10.2 million, or whose balance sheet assets are 5.1 million, not £5. Actually, it's if you have two, but if you have one, or if you're actually anywhere near one, I would like you to conform to the legislation, because sooner or later you will top those thresholds, you won't notice, and you'll be up without a paddle. So if you're anywhere near those thresholds, I want you to think about whether this legislation applies to you. And what is it about? It's about all the people who work in your offices or on your sites who, if another person wasn't paying them, might be your employee. So the way they work, the way they're directed, conform, take materials off your shelves, is so similar to employees that it's only the chain that pays them that disguises the fact that there is an avoidance of pay as you earn. So you're going to have to test people on the pay as you earn tests where actually you're not their payer, and you're possibly nowhere near their payer. So your firm, for example, pays an agency or some sort of intermediary, and that intermediary pays a company, and that company is how the human being gets their living. And they get their living because they own their own limited company. That's what this legislation is about. It's about people working for their own limited companies. Sometimes your firm will pay George Canning Limited, and everybody has always told you that's safe because you're paying a company, and therefore there is no worry about pay as you earn. After the 6th of April, there is a worry about pay as you earn, or you're paying some sort of intermediary, and that intermediary is paying the person's limited company, and you're getting the person on your site and in your offices. That's what this legislation is aimed at stopping. Getting pay as you earn out of that chain is what it's aimed at, and it starts on the 6th of April. Right, I want you to make a list, and this is a list of suspects, and these are the suspects you're going to test to see if they should be somewhere in the chain in pay as you earn. I want you to test anybody. Right, let's who are you not looking for? You're not looking at people who are already on your payroll. And you are also not looking at anybody who works for a subcontractor who has taken a proper part of the action from you, a genuine subcontractor who is priced for work. His men do the work. The QSs sign it off. You couldn't care less which men do the work. You don't supervise them. The QS signs the work off at the end of the day, and all you care about is the quality of the job. He supervises and controls his own workforce. You don't care. He may have a problem. You don't have a problem. But I want you to think about looking out at your sites and offices, the regular faces, the people whose names and faces you know who are not on your payroll. Anyone with your firm's name on their business card or named on your website. Anyone who wears your clothes, not just wears your logo on their clothes. Anyone who sits somewhere regularly or attends regularly, even one day a week. And anyone who others might think was your worker. But when they look out at the workforce, this person is indistinguishable from your workers, doing the same sort of thing. Anybody that you know has no other engager, as far as you know, or has very few. And I want you to listen to your ulcer, and I don't want you to fantasize. I don't want you to think, oh, I'm sure he has clients at the weekends, or he has holiday and he probably does something and he does something for himself in his holiday. And when your ulcer tells you he has very few other engagers, listen and put him on your list of dangerous suspects. Anybody who's previously worked for you in pay-as-you-earn and is doing the same sort of job, even part-time. When you look down your subcontractor lists, anybody that you can see immediately is working for their own limited company, or you know is working for their own limited company. You know, if it's called Henry Higgins and you know Henry Higgins, you know it's his own limited company. Anyone who you asked to work for you, possibly through their own limited company, but because you liked them and you liked their skill set. So you particularly wanted them. You wanted the human being. Goes on your list of suspects. And unfortunately, in the industry, we do have suspects who are self-employed, paid through long routes, but are insured to drive your vehicles and do drive them. You give them holiday pay or allowances for travel. Anybody that you train, anyone who comes to your Christmas party, I do not mean your wife or girlfriends, anybody who might loosely describe themselves as working for you. Members of Inland Revenue staff don't live in Christmas hampers or laundry hampers. They live in communities. And if they when we're all back and can stand in pubs or talk to cousins, if they say, you know, oh, I work on so-and-so's projects, it will raise a moment of interest. So you have this list of suspects that you're going to have to test. You are going to have to test them because the legislation that comes into force in April puts responsibility for pay-as-you-earn onto the business that pays the limited company, that pays the end person. Start at the bottom. There is a human being. One level up, there is that human being's limited company. eBridge has eBridge Limited. And there will be some body that pays eBridge Limited. In law, they're the fee payer. And the law says that the fee payer must operate pay-as-you-earn if the person themselves, when working for you, is doing something that ought to be in employment. There may be people listening who are breathing a sigh of relief because they're thinking, well, I'm not the fee payer. Some of you will be the fee payer. Some of you will be paying eBridge Limited, and you're going to have to apply pay as you earn to the money going to eBridge Limited if eBridge fails what's called assess test. But let's say there's a long chain. If the fee payer in that chain doesn't operate pay as you earn, the liability will come skimming back to you because you are the person who used the human being on their site or in their offices. That is the strength of this legislation, is that it takes the activity for operating pay as you earn onto the fee payer. But if he doesn't do that, the liability goes back to the firm who used the human being. And you're looking at the human beings on your sites and in your offices because you are the firm using the human being. There is something called assessed test. You find it on the Inland Revenue site. You go into Google, you type HMRC CEST, and you'll find interactive test. It is totally anonymous. They cannot see through any software. There's no chip that they can see who's online. So you must answer the questions truthfully. Because if you lie on assess test, the person that you are fooling and leading into trouble is yourself. Once you've used assess test enough, you'll start to learn the questions and you'll start to sort of see how the answers turn up. If you want to change the way you engage people, that would be up to you, but you would have to do it permanently, forever, and be sure that that's what you were doing. If, when you do assess test, a man turns out to be self-employed, you go back in, you type his name in, and you do the assess test and you print it out because you have tested and he is self-employed. He is not on your risk list. But if you do assess test and somebody is dangerous, they are an employee, you have got to handle the issue. That's where the public guidance is. I think that's the last of my slides because really I can't tell you how to handle the issue. It's an HR question because if somebody is truthfully an employee of yours, let's say you get him through a very long chain where there is no pay as you earn. He works for his own limited company at the end of the chain, but what he actually does is works with a shovel on your sites and you tell him what to do every day of the week. Pay as you earn has got to be applied. He is used to having take-home pay with no national insurance in it. And suddenly he will have take-home pay reduced because there is national insurance in it. You are used to paying a chain which does not have employers' national insurance in it, and that chain will suddenly have employers' national insurance in it. So all sorts of conversations have got to be had up and down the chain because the man will want more money, you will want, somebody will be asking you for more money and you may not want to pay it. It may be cheaper to take him into pay as you earn than to pay a chain to pay him under pay as you earn? I don't know. But if there is a chain in place and you think he fails a CES test, you have to tell the chain to operate pay as you earn, and they have to operate pay as you earn, and you have to be confident they have. And if there is, you tell the chain that you want pay as you earn in there, and they say, oh, that's all right, don't worry, and there's no more said about it, something is badly wrong, because nobody likes less take-home pay, and no agency likes to cover employers' national insurance contribution and not have a bigger take. And it probably means nobody's doing anything, and that means you're at risk. So this has got to be handled. You start with the website, you start with the list of suspects, and you start playing with a CES test with your list of suspects. And I think that's the end of my gamble through both topics. And I don't know how we're doing for time.
We're doing
Okay.
fine for time, but we've got quite a few questions, so I'm going to crack straight on. But thank you very much, Liz. First question is, so taking the VAT, why are government doing this? And are they going to change they changed their mind twice before. They're going to change their mind before the date this time?
Too late to change minds now. You know,
Okay.
very large number, we're 2 weeks to go. It's an enormous ship to change. The software houses have designed software. Everybody's got software installed. Large numbers of the main players have got databases up and running. The revenue's got hardware installed. We're going live now.
Okay. So why are they doing it?
They're doing it because at the moment, if a customer pays, let's say, £100 to a main contractor for work, the chances are that the main contractor pays £80 VAT to the next layer of subcontractors, and the next layer of subcontractors pay £60 VAT to the train below them, and 40 below that. Actually, it's even more substantial. The chain going down is more substantial, and Customs and Excise have to pick up their VAT from very, very large numbers of small contractors at the bottom of the chain. And they don't like their money going hand to hand to hand, because at the bottom of the chain, hands go missing and people go bust. What they're going to do is they're going to have the customer pay the main contractor the VAT, and then the main contractor pays all the VAT out to Customs and Excise at the top, and everybody else in the construction chain reverse charges. So no money of VAT moves up and down the construction chain. So the people at the bottom never get paid VAT, they never owe VAT, and they never have to owe it at all. It comes out from the main contractors at the top. Customs get their money much earlier, and they get much more of it.
So it's a leaky bucket. They're stopping a leaky bucket. Okay.
Yeah.
And IR35, that's because people are properly employed and it should be recognised. Is that it?
I think there's more and more pressure. If you think about what's happened to the Uber drivers this weekend, and what's happened in furlough, where it's been important to be an employee and it's been very hard work to not be an employee and to be on self-employed contracts. There's more and more emphasis on the fact that ordinary people who really aren't in charge of being their own business, but are there to do what other people tell them, should be in pay as you earn and get the rights that go with that.
Okay, thank you. So let's kick off with the first from the attendees. So we are unsure if we are exempt as a commissioning and testing provider. So they commission and test systems. And what if your CIS5 status, i.e. exempt? So there are quite a few questions around this.
Yeah, there's no exempt, okay? So if you're talking about exempt, you have to cross that word out. It is exactly the same if you're gross or net status. For a start, let's think of the men working for you. They are, go back to that flow chart, they are doing work within the CIS scheme for you. If they are working with tools, installing, repairing, it probably is unsafe to pay anybody VAT down the chain. You have got a problem as an industry because some of your work is inside the scope of CIS and some of your work is outside the scope of CIS. But what I would say to you is that when you are working for a main contractor, the main contractors, I think, will think that your work is within CIS, will give you their UTRs and their VAT numbers, and they will expect you to reverse charge them. Historically, the main contractors have run two purchase ledgers, a main purchase ledger and a subcontractor purchase ledger. The subcontractor purchase ledger is run so that everything that's paid on it gets shoved onto their CIS returns, and therefore their CIS return is always correct. Many of you are gross status, so you don't know that. But as the main contractors pay you, they check your UTR, they know that you're gross status, they run out the payment, but the whole payment goes onto a CIS return because they're very, very scared that work might be inside the scope of CIS and they won't have put it onto a return. So they default by putting everything onto a return. I don't know how far you can understand this, but when you're working for a main contractor, they will think that all the work that you're doing is inside scope. If you start to quarrel with them and start saying some of my work is outside scope, they may be reluctant to pay and they may want a discussion with you about whether it's inside or outside scope. That will slow down the payment. If you say, I give in, it's wholly inside scope, I'm going to reverse charge you, they will feel safe and they will pay you. You won't get the VAT, which will be hard on your cash flow, but you will get quick payment, which is good for your cash flow. You have got to think that through, where you personally know that some of your work is inside and some of your work is outside scope. To know what's inside and outside scope, you go online to a document called CIS 340 and you go to Appendix C and you learn Appendix C, and then you think whether you're going to have quarrels about Appendix C or whether you're going to submit to allowing main contractors to pay you without VAT, because they'll be frightened. It's going to be an issue.
We don't like our members rolling over. We like them to be informed. So I've got a very similar question. Hang on a second before we go. So we carry out service and maintenance of boilers and heating systems for a facilities management intermediary company. We do not carry out any new installations. So the FM company are asking us to invoice them under Reverse Charge Scheme CIS 340, Section C3, included and excluded operations state that maintenance and repair of heating systems are excluded from the scheme. So that's not an unusual position where a bigger maintenance company hires smaller maintenance companies to do specific bits. So they think they're excluded. The main company thinks they are included.
I know, you see, that's the problem. And you could have that fight for a very long time, because what you've actually got is some very antiquated legislation that isn't really very clear. I was just looking to see if I could see it quickly to read it to you. The installation inside scope is the installation of in any building or structure of heating, lighting, air conditioning, ventilating, drainage, the installation of systems. Right, and we've got, I think, on the other side, outside scope, manufacture of components, professional work.
Well, this is maintenance, and the same with the previous question. It was about testing and commissioning. So you're not adding any.
You're in a piece of legislation where it isn't clear. So you can argue with your main contractor on each particular project. What you've got is the person paying you frightened that if they pay you VAT, they are letting VAT trickle down the tree, which is just what they're not supposed to be doing. So they'll be frightened to pay VAT. They know that they ought to be, that the default position is reverse charge. At the start of a contract, before you've done the work, I would say have a sensible, sane conversation with somebody about whether it's going to be in or out of scope. But as you go into this world, and you want money for projects in March and April, these particular projects that are ongoing, where nobody's sorted out the scope in advance, it may be better to just accept its inside scope and get your money than to start a conversation with the main contractor who'll be very busy. I'm sorry about the dog. He'll be very busy. I think the dog's
disagreeing with you, actually, are they?
Yes, yes. He's obviously meant one of the women. They'll be everybody's office will be very busy.
Yeah.
Scope legislation isn't clear. It's very uncertain legislation. So you'll be fighting. Am I inside scope? Am I outside scope? If you would accept being inside scope, you get the money for the work and you will get it quickly. If you want to fight, you will hold up the whole payment. And that's all I can say to you.
Okay, thank you. So let's talk about the scenario, because this does damage people's cash flow. What if you can't pay your next VAT payment? Or if you've got one to make, or you can't make any payment to HMRC, what do?
You phone the revenue before your due date and you ask to stage it. Now that's the good thing about starting now. Historically, if you phoned Customs and Excise and said, I can't pay my VAT, they would tell you to take out a credit card, to mortgage your house, to get a loan from your bank. Basically, they weren't interested. Very rarely would they, they would stage payments, but honestly, they were as mean as hell with it. Because we're in a COVID pandemic, they are staging threepence a week for the next, they are staging payments hand over fist. So if your cash flow is tight and you have taxes to pay, you phone before the tax is due and you explain the problem you're in and you stage. Because just as you won't be paid VAT, you won't be paying your subcontractors VAT. So there will be some easing in the mechanism I can't help more than that.
Okay. The next question, when do I account for the reverse charge?
Right, it starts on the 1st of March and it starts at midnight on the 28th of February, if you follow me. So
yeah,
if you are looking at an invoice with a date in January or February, it will carry VAT, and it's correct to carry VAT. If the date of the invoice is the 1st of March or a date in March or April, it should be reverse charged. Right. A lot of you won't be working on invoices, you'll be working on applications for payment. Applications for payment are not invoices. Could you wring that dog's neck? Applications for payment are not invoices. They're sorts of love letter. What matters on an application for payment is the date you receive the money. So if you receive money in February, part of that money will be VAT. If you receive it in March, it is wholly without VAT. It does not matter a bean when the work was done. Nobody but you is interested in the work was done. I can only make a joke of it. If you were asking for the work to Canterbury Cathedral and you did it in 1066, it wouldn't matter. If they paid you on the 10th of March, it would be reverse charged. So it doesn't matter when the work's done. It's the earlier of an invoice date or payment. Find out which the two. Did you invoice or did you make an application for payment? And it's a payment date. Look at that date, and that binds the VAT treatment.
Okay, I think they're still waiting for the last release of retentions on Canterbury Cathedral. Do I need to change what I put on my invoices?
Yes, yes. Right, you need a blank. You need to have designed a blank. The invoice for an ordinary piece of work at the moment will say, left-hand column, miscellaneous works done, right-hand column, £1,000. Next line, standard rated 20%, right-hand column, £200. Bottom of the right-hand column, please pay me 1,200. A reverse charge invoice is not a technical document. It says work done, £1,000. Next line, standard rated supply, reverse charged. All it says, and there is nothing under the 1,000. So it's please pay me £1,000. The bit that's important is it says reverse charged, pretty large and in bold type. This isn't in the law, but you want the recipient to know when they're processing your invoice that it's a reverse charge invoice. Equally, when you receive a reverse charge invoice and you process it, your software does something very strange with it. It takes it, calculates the VAT, and it puts the VAT on both sides of a VAT return. So when you receive a VAT invoice for £1,000, it will put £200 VAT on both sides of your invoice, of your VAT return. There is no more to pay, but it's showing the level of work you're doing. And so you need software to do it. Okay?
Okay, fine. So, final question, I'm afraid. How does making tax digital affect the reverse charge?
Your software will do reverse charge and making tax digital, I hope. It's got to, because it's impossible to do reverse charge without software. Where making tax digital may be very useful to you is if you are somebody that needs to become a monthly repayment trader. So you're putting in a VAT return monthly and getting a refund from Customs and Excise monthly. The whole business of doing a VAT return is much easier under making tax the digital accounting. They're just, Big Brother is creeping up on us by minutes.
Here to stay. Liz,
Yes.
thank you very much indeed for that. And that's been great. We have some questions that we'll post on the LinkedIn page afterwards, which we would, if you can have a look at them, we'll coordinate with you to answer any unanswered questions. Just a reminder to people that you've already recorded a 40-minute version of the VAT section, which will be posted this evening. So people will be able to watch that at their leisure, just the thing you need before you go to bed, VAT, reverse VAT. If they've got questions, we will coordinate them and bring them to you rather than going directly to you. I think it makes it easier if we do that.
When you've got questions, always go back to that flow chart and just take your question quietly through the flow chart, because the flow chart will answer things. It's just that people panic, and they also think they have to answer all the questions on the flow chart. The flow chart is a flow chart. You start at the top, and the minute it gives you an answer, like normal VAT invoice, you stop. So just take it quietly through the flow chart.
Great,
okay.
Thank you very much. You go and feed the dog, because he's obviously needs feeding.
Decided to ring his neck. He fights
Thank you very much.
Okay.
So thank you very much, Liz.
Thank you. Bye-bye.
Bye-bye. So just a reminder, if you're a BESA member, you can email with specific questions to legal@thebesa.com, and on our member-only section of the website, there are templates and frameworks for you to use to do that. So that's legal@thebesa.com, and they will answer your questions. Coming up, Thursday, the 11th of March, Beginner's Guide to Indoor Air Quality. Indoor air quality's just gone up a huge escalator of importance to everybody. We're running a webinar on Thursday, the 11th of March, and the Beginner's Guide to Indoor Quality is, I believe, published today. So Graham Fox has the details on that. BESA Connect. So we're aware that many kids don't have access to proper IT equipment. How can they do lessons on their mobiles? The same is true of apprentices and people within the industry. So we've partnered with Softcat, who will take your old IT equipment, clean it up, and then send it out to apprentices. We need to have greater diversity in our industry. We need to be able to get people who are not, as privileged as some of the others. So please, 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 if you've got equipment, please get in touch with us via that web link below. And on Thursday, SHEP are using our site again to do understanding and using the new UK CA and UK NI marks. Over 1,000 people have signed up from that. So if you there's a waiting list, but if you still want to, you can sign up for that. I think that's just about it, unless Martina's going to move the last slide for me and it's something different. It isn't. So thank you for listening today. If you've got questions, look on the LinkedIn page where we will continue the conversation, or legal@thebesa.com if you're a BESA member. And once again, thank you, Martina. Good luck in your new role, and I'll say good afternoon.